Today I'm going to talk about how to plan your trade before you enter your trade. Now, when I say about planning your trade, when you plan your trade, you need to have a good look at the charts before actually getting into the markets, in the real-time markets. So, if you look at a 1 hour chart, for example, okay, now in a 1 hour chart, you could say, let's talk about, you've got a chart here, and we look at a cable. When I say cable, I mean pound, G against a dollar. Okay, so that's a cable trade here. And you have a look at the chart here. Okay, and these are your prices. So say your pound against the dollar, the price is 1.3712, 1.3714, 1.3716. So we're going even, so there's a 2 pip spread there. Okay, 1.3718. Okay, now we see that this is a 1 hour chart, and from the 1 hour chart we can see a trend. For example, let's draw a trend, and we see the market is showing resistance. Okay, something like that. And here it kind of bounced off. Okay, is that clear? Right, so the market is showing resistance, so you could say that's R1, R2 and R3. Okay, now if I follow the Fibonacci methodology, I can simply tell from this 1 hour chart that a lot of ample of selling has been taking place. So a pound against a dollar has been selling for quite a while. Now, if I draw if I just mark the calendar, for example, so say this is June, which is this month, and say this one is May, going backwards, so this is 16, and this one is April 16, and this one is March. Now, if I go back, I can see a lot of selling has been taking place. So pound has been sold at these prices. So a lot of selling has been taking place, and it's been selling for quite a while until the month of June. And we see from the June period that now the pound against the dollar has bounced off. So now the pound is trending upwards. Okay, so this was trending downwards for a while. So it was trending downwards from 1, 2, 3, 4, roughly about 4 months, you can say. 4 months. Okay, and for 4 months you can say, so if a month is 30 days, you've got 30, 60, 120, 60 plus, 90, 120. So that gives you 120 days of moving average. 120 days of moving average. So after 120 days of moving average, you can see the market's now bounced off and it's gone towards the upward trend. So after 120 days of moving average, I look at the chart and I say, I'm not going to buy, I'm not going to sell, I'm going to buy. So now when I see this chart, I can discover that, or I can make a decision, or preemptive decision, for example. Market may go against me, I don't know. But from this market chart, I can say to myself, I'm going to enter a buy trade, not a sell trade. Because from the backlog, it's been selling for quite a while. The cable's been selling quite a while against the dollar. And now it's time to buy. So I will do a buy with a 20 pip stop loss. And I'll put the stop loss somewhere here. So if it's a 1 hour chart, it's going to show up small on the screen anyway. So that'll be a 20 pip stop loss here. And my entry point will be somewhere here. So I'm going to enter a buy trade. Okay? So that is the way to plan your trade. So I normally plan my trade by looking at the 1 hour chart and I see how many moving days average it has occurred during that time frame, June, May, April, March, and then afterwards I make a decision, like this market has bounced off, which is a pound against the dollar, and I can make a I can take a buy position here, and I can put a stop loss of 20 pips. So that was my main purpose, to tell you how to make a plan before you enter the trade. So that is applicable for every different derivative chart or every different underlying asset. So if you're looking at a euro against a dollar, if you're looking at Aussie dollar, if you're looking at a US CAD, it's all the same procedure. You have a look at the chart, you have a look at the backlog, you look at the moving averages, is it 120 days or 180 or 50 days moving averages, and then you can determine whether you want to go for the buy or you go for the sell. So that's the best way of making a good decision before you enter the trade. Thank you very much for listening to my video, and there's more to come. Thank you.